Good evening, ladies and gentlemen, and welcome to our webinar presentation with Raghee Horner, where she's going to help you discover how one setup can thrive in any market and discover why anchored volume is indeed the key. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Raghee at the end of the presentation. If you'd like to maximize your screen real estate, you can do so by minimizing the chat section via the down arrow just above the chat. And you can also maximize the video by hovering over the video and clicking enter full screen. And now without further delay, I present to you Raghee Horner.
All right, welcome everybody. Should have good audio and video. Great to see you all. Love this new platform. The interaction is great. And I got the green light. We are good to go. All right, gang. Thank you so much for taking time out in your day to join me for, as you can see right here, why volume matters. We've got a stacked slide deck here for you all. We're going to cover a lot of examples. Of course, leave some time for questions. So if you have them, we've got a whole crew in the background. I'm looking at the room right here, just off to my left. We've got a whole crew here willing to make sure that this goes as smoothly as possible. And I'm willing to stick around and answer those questions because this is a really important time. All right, so let's get to it. We've got a lot to cover. All right, so why volume matters in your day trading, right? The whole idea here is in your day trading, we talked about weekly and daily before. When we shorten the time frame, is it any different in terms of volume? All right, so what we're going to be talking about tonight. All right, what volume and one setup? This is the big idea. Again, we touched on it last week a bit. What is the one setup and how can it improve your trading? What will it mean to your day trades? How to avoid common mistakes in using volume, the tools you need to deal with this roller coaster ride of 2022. I often tell our traders, like today when we were looking at the FOMC, I said, I hope you've got your Dramamine handy. Despite the current market conditions, gang, there are opportunities. I'm going to show you what we've been doing since summer. Since things got pretty crazy during summer. I'm going to show you how we've been doing since summer and ways to succeed in your trading. That is what we're here to do. All right. But Rag, all right, a lot of you might be thinking, but Rag, I already use volume, right? How many of you watch Limitless? Bradley Cooper staring at that little thing of NZT thinking, things are good enough. Me and my shaggy hair, and I haven't finished my book, and I live in a shambles, but hey, things are good enough, right? What often happens is we function on autopilot for so many things, eating, exercising, talking, right? You know what you're doing with each activity, so there's no need to further educate, to contemplate, because I've got it, like Bradley here, right? Until we realize there's a problem and things need to get better. Bam! I love this movie. This is how I want to feel all the time, right? I want to see in 4D. I want to see everything, right? When we realize that the things that we do, and I know it's a very busy slide, right? I love that though. I think my synapses fire better. So when we realize the things that we do without much thought, right, are not yielding the results we need, that is when we need to dig into other ways. And until there's NZT, there are better ways of doing things that we think we know how to do, right? We do this a lot as traders. So we're running on autopilot. We need to get to a point where we are profitable, we're confident, blowing up accounts, losing loads of money. This is what we don't want to do, right? So we're going to dig a little bit deeper into what we need to do to turn the corner. It's volume, gang. So why volume needs to be a key part of your analysis. Are you seeing through walls yet? I want that NZT feeling. Absolutely. It's going to help you with this unpredictable market and every unpredictable market that you're going to deal with in the future. Gang, I can say this. We're going to talk in a moment why. I can say this with a lot of confidence, how much it's going to help you find clarity and key levels, not leave you frustrated and wrong, right? So how do I know this? Well, I've traded through a lot of crazy times, as have many of you, but I did so with volume because, like many of you, I've already seen what the abyss looks like. I've looked down that my account, the market, the uncertainty, and I found a way to trade it, right? So we turn around and we say, how do we do that? And we start to deconstruct. So this is a perfect example of volume and size indicating a shift in support and developing it. Now I'm going to grab my drawing tools here. I love doing this. I love marking up charts. I'm going to do this really quick. This is, of course, it's a weekly chart of the S&P. This is what I was doing when I was figuring out what the heck do I do with my portfolio, how to explain to my family that I can't trade this. Unacceptable. I found support, volume-based support, right? That's the key. That's the key. And the market here, in this case, this is '09, right? This is '09. This is still when we were all pretty panicked. And then shortly after, you know what happened. What started the ball rolling? Gang, it was volume. It was support based in volume. All right, let's take a look at another example. This is the SPY. So some of you might think, Rod, does it have to be futures? Absolutely not. As we go through the examples, I'm going to walk you through the different ways you could take advantage of what I'm showing you here. So, I need to take you back to 2008 just for a moment. We did this last time, and I think let's do it from a slightly different perspective, because now we've dealt with 2008. And I think when you've dealt with that kind of abyss, we know what not being opportunistic cost us. What is it costing you just absorbing all the negative chatter, right? And not thinking about what you can do with the price action you're getting right now. So this is the whole idea. This is SPY right here. Here's your volume-based support. This is what got the ball rolling, okay? Now, even though we're going to be talking about day trades tonight, I just wanted to make sure we touched on and just kind of connected the story from last week, from the last conversation about weeklies and dailies, and show you that the same tools that I used to trade weekly time frames and daily time frames are the same ones we're going to see when we talk about the day trades, right? I've got plenty of day trades to show you, but I do want to remind everybody there are opportunities that are happening right now, gang. And these are opportunities that are happening now, and that even though we saw some weakness today, I know today might have a lot of folks rattled, right? There are opportunities happening, and I'm going to show you where we're not breaking down through key levels, not yet. And if you're thinking, Rog, I don't even want to have to worry about what happens next, I hear you. This is why we're going to day trade. How well has day trading been going? Really well. All right, so let's turn the page. We know it works on daily. We know it works on weekly. But what if I told you the same process, the same setup, the same patterns work on a 5-minute chart, work on a 2-minute chart, right? Okay, so this is how it's been going since mid-June. Why mid-June? The early part of the year, I had quite a few decent daily time frame overnight swing trades. Things were going okay, not great, but all of a sudden the Federal Reserve hiking rates shook things up. And I had to adjust. And the biggest adjustment we made was, hey, gang, let's free ourselves up from not worrying about what happens tomorrow. Heck, let's not even worry about what happens after noon Eastern. Let's tackle the morning as a day trader, free ourselves up from needing follow through. And this is what I've been doing since mid-June. All right. So I want to show you all, this is a really important gear to be able to shift into. You have weekly gear, you have the daily time frame gear, and now we're going to talk about the day trading gear. All right, so day trades are for tonight, but I really want you to see there is a thread that goes through all of it, and that is volume. So what type of trader needs to be looking at volume? If it's not obvious by now, day traders, swing traders, and yes, longer term. That chart of XLV that I showed you all, that's a long position I have that actually in this market, I'm up a decent amount on that XLV trade using volume, okay? All right, so everyone needs to look at this. And if you trade futures, options, stocks, ETFs, gang, the bottom line is you need it. I'm going to show you why it's going to give you an unbelievable edge, all right? I do want to mention that as we go through the examples, we're going to talk about different ways that some of these can be traded, because while I'm not thinking large account or small account, we are thinking scalable. And someone nudged me because I've got a crazy story to tell you all about scalable, the mindset of scalable when we get into the examples. All right. So price is not enough. How many times has a new lower low or higher high looked like it was going to follow through? Instead, it reverses. That's volume, support, and resistance at work, gang. Price is incomplete without volume. All right. And I've traded with and without volume. Remember, volume really wasn't a key part of my trading until everything just sort of fell apart in 2008 and I had to find a way out. Right. So I'm in the pit and I realized the lifeline back out was volume. So I can tell you which works better. I've done both. Anchoring volume correctly. Now we want to anchor volume. We talked a little bit about that last time. Anchoring volume correctly gives you a chance to take your trading to that next level, to shift gears in mid-June when the old style isn't working and say, we need to day trade now, or shift gears to a weekly and find opportunity longer term when everyone tells us the world is falling apart. There are opportunities, gang. So your P&L should be looking like a steady uptrend. That's my goal. That's my goal for everyone here. Understanding that volume needs to be a part of your analysis. You don't need to replace any of the tools that you already have and like. Volume is going to supercharge everything. Okay. Now, can you use this strategy if you're new to trading? Oh, gosh, absolutely. You'll be ahead of the curve. You'll avoid common and often very costly mistakes, right? Because your learning curve will be substantially cut down, especially when I show you what I'm doing right now, which is a process, really a pattern, if you will, that keeps us looking at volume, price, and the trend, which is so important, right? So I've already made these mistakes, whether that be complacency, whether that not be using volume, and I've come up with the fix, the solution, right? So I want you to avoid the kind of pain that I had in '08 that a lot of you might have had in '08. I don't want you to have that again, right? So we're going to put it all together here for you all tonight. Okay, so the most common mistake, gang, the most common mistake, you might want to write this down if you're not doing it, is day traders, well, any kind of trader, but day traders don't realize that the very commonly used non-anchored VWAP, it's also known as a rolling VWAP, is based on the price and volume data only of the current session, right? Commonly, these volume weighted average prices are just mechanically reset every session. So you're not really thinking from a certain point forward. It could be pre-market, it could be the bell, it could be the European session. You're just randomly taking whatever your system has anchored and saying, all right, well, I guess I'm going to let the system figure out what's important to me. That's a big mistake, right? We want to anchor these. The reason we want to anchor them is without that, it makes them way less accurate. So what's the fix? Learn how to select the appropriate, the accurate placement for these anchors, right? Proper anchoring makes the directional bias. In other words, what is the side that I favor for the trade? It makes the directional bias way more accurate. This is what I trust, right? I trust when I anchor a VWAP, it's measuring what I want it to measure, right? So the anchor levels to consider could be time. A lot of folks like a 9:30 anchor. I like a 7 a.m. Eastern anchor. They could be gaps, these psychological holes in the chart as well, and volume, increased attention. Earnings could be one of those situations. Non-farm payroll is coming up on Friday. That could be an interesting anchor. So there's lots of ways to consider these anchors. That's a big mistake. And if you just make the small adjustment of anchoring your VWAPs, you're going to see an unbelievable increase in accuracy. All right, so let's get to it. What we're here to do, talk about charts. I could do this all night long. And this is what we're here to see. How is it working? All right, last time we talked about the daily and the weekly. This time we're going to dive into day trading setups. I already showed you how from June forward, going almost all in. Almost everything I've done since June has been short-term in nature, as many of the Sector Secrets Mastery folks and even futures folks know. We've been dealing with this because of the choppy market. So when there's less follow through from day to day, from session to session, we shorten the time frame and we get nimble, right? We don't expect a market to do something that it really hasn't been capable of doing. So remember, this is really important, gang, because I don't want anyone feeling like they're left behind in any way. Remember that even when I have a futures trade example, very often there'll be a micro, right? Very often there'll be an option, a liquid option, or an ETF alternative. Think S&P futures also mean setups at SPY or SPX, right? And the setups are exactly the same. Not only are they exactly the same, if I'm going to set up the SPY, I'm still looking at the S&P futures. If I'm going to set up the SPX, I'm still looking at the S&P futures, okay? So keep that in mind. All sorts of different alternatives to the futures are still valid, all right? So let's start it off with QQQ. This was one symbol, 3 trades. So when we're day trading, we're going to have a whole lot more activity. We're not going to be surprised by that. More candles per day mean more potential patterns. All right. So this one is an intraday NASDAQ trade. Remember, QQQ, micro NQ, options on the NQ. These are all going to be valid. And this was using some Trendalorian momentum. A lot of folks said, Rob, I want to see what Trendalorian's doing. This is a short sell at 11,395. And it took us down to 11,305. Okay. 90 points, $1,800 a contract. So this is Trendalorian and the V score resistance, right? So there's interesting. Let me point out a few things here. Trendalorian, V score resistance. So before the Trendalorian said, hey, let's hit the accelerator, the V score said, we want to focus on a short side because we're on the upper end of the range. And then Trendalorian said, I got your price level. Okay. That's the way that worked. Really simple. And then we bottomed out. Well, where do we bottom out? Once again, we went from one end of the volume support and resistance, right? Volume resistance to volume support. And then we did it all over again. So this is the kind of thing that, and here's Trendalorian saying, hey, yep, we still got a little more to go. Here's another Trendalorian. Volume topped out, just like before. Volume topped out. Trendalorian kicked in. Trendalorian's oftentimes going to be the last piece of the puzzle. All right. If you're wondering, where does that come in the whole trading process? It's going to be the last piece of the puzzle. All right. So what do we get here? This is $3,400 a contract, gang. $3,400 a contract. If I'm trading QQQ, I can also trade NASDAQ futures, mini, or micro. So keep that in mind. I think this one was a total of almost 160 points going each way at $20 a point. And that was all before 11:30 a.m. So when I tell you we're looking at small windows, I really, really mean we're looking at those tight, small morning windows. Let's take a look at bonds. Okay. You think, Rog, I don't trade bonds. You trade TLT. So the same trade is going to apply here. In fact, you'll be watching bonds to trade the TLT. What do we have here? So cool. Support, support, momentum. There's your pattern. Support, support, momentum. And then you can see what we did after that. Once we start getting really, really into a trending mode, gang, there's no reason to get off the pedal. So there's a lot going on here. What am I measuring? I'm measuring the support of volume, the structure of the market, and I'm waiting for a price pattern again and again. And sometimes it's Trendalorian that's going to be part of that price pattern. Again, Trendalorian is when volume tells me we're hitting the accelerator pedal, okay? So in this case, if for those of you that don't trade bond futures, it's a great market. TLT is awesome too. This is $31.50 per tick. This was nearly a $1,700 move. It was specifically $1,693. That's the move. By the way, when you're day trading futures, some brokers will give you initial margin as low as $500 per contract. It doesn't make it low cost. It doesn't make it low risk. It only makes it low cost. If you want the lower risk way of doing this, you play the options on TLT or you play the options on the ZB. So again, $1,700 because we had the cue that the market hit the accelerator pedal. Okay, so just a couple examples of putting the tools together. So the process starts with volume, gang. The process is going to start with volume. So in this case, this is the Dow. All right. This is, yeah, so bot's telling me, all right, so I tell him the story. Here I am. All right, this is the Dow trade. And I was talking to Lorna Bot. Many of you know Lorna and Trish here in the office. I said, should I tell them what happened here? I said, yeah, go ahead and tell them. You all were with me in the Sector Secrets Mastery. This was one of our trades. I had 100-degree fever. And I thought, if I did nothing else for this webinar, and I'm feeling much better, thank you all for the well wishes. When I spoke with you all last week on Tuesday evening, I had a 100-degree fever. And I thought, this is just too important for me to not do. I traded that week, Monday, Tuesday, Wednesday, Thursday, and Friday. And the fact that I had most of what I need automated made a huge difference. We went actually last week, and again, this is not a normal week, but last week we went with no losses in our day trades. None. We had a couple of agros that stopped out. That may not mean anything to anybody, but we went 100% on our overall trades. Why? Well, because even with a fever, you can make this happen. You look at the signals, you know the support, you wait for the patterns. So I wanted to buy 6 YM contracts. By the way, 6 YM contracts at $5 a point. And we had here in this move, we moved from the support of about 32,050 to where we topped out. The first target was 32,480, and we topped that again at about 32,007 at approximately 6 contracts, $5 a point. You might be thinking, okay, Rog, well, what are we talking about here? Just to give you an idea. All right. So the first target was 32,480, and I had got in at 32,050. Okay. So 430 points at $5 a point. That's one contract, gang. And I wanted 6. That's just that move by waiting for volume, the right underlying market trend, and my signal. How many signals did I get? 1, 2, 3, 4, as the V score was bottoming out. Okay. But I was sick. All right. But I wasn't feeling so good. And I cover up my P&L so I don't make irrational decisions based on dollars. I just play the charts. I just play the chart. When all was said and done, I had not traded 6 contracts. I traded 60. And so I remember telling Bot, I said, what just happened? And I realized what I did. Why do I tell you this story? Because one day you might be trading 2 micros right now. You might eventually trade, say, 2 or 3 mini contracts. Maybe you'll trade some DIA options. But as your confidence gets bigger, it's amazing how your account will oftentimes get bigger, and you will be able to scale with more contracts into a trade. That is my hope for you. Not to accidentally trade 60 contracts, but if you want to, you could, right? And so that's the kind of confidence I have in this. That wasn't on purpose, but holy cow, what a trade. All right. So those of you in the mastery thinking, Rob, that was a really good morning. It was a really good morning. All right. The process needs the multi-trend. The process needs trends. We talked about the process needs volume. The process also needs trend. Gang, I can say this with a lot of confidence. If you right now are struggling in your trading and you love your indicators, there's 2 things you're missing. You're going to say, Rog, I know it's volume. Yeah, it's definitely volume, but it's also, are you aware of the underlying environment that you're buying or selling within? Whenever I sit down with a trader and I look at their trades, the ones that went right and the ones that went wrong, there's very little exception to this. The ones that went right were in the same direction as the volume trend. And the ones that went, well, not so right, were fighting the volume trend and they were fighting the price trend. We cannot fight the price trend, gang. So in this case, we're neutral. I'm going to show you here what neutral looks like. We're neutral. Signal, right? So we have our volume, we have our trend, we get our price, off it goes. What is XLV? Those of you that have never traded XLV, you can get into XLV options. This is such a beautiful setup if there's liquidity. They can be traded for usually less than $2 to $3 per option. And when there's no liquidity here, we'll trade something like Johnson & Johnson. So my stock traders, my day trading stock traders, anyone here that's a day trading stock trader wondering, Rog, how does this apply to me? Absolutely. Let's say you want to day trade Johnson & Johnson. You see XLV moving and you want to jump into some J&J, or maybe you want to jump into some UNH or some AbbVie, etc. Right? This is the way you start that. And when Johnson & Johnson and XLV are moving together, you can pull the same thing on Johnson & Johnson and it will look the same. Why? Because if we have volume and bullishness on XLV, you better believe the number 2 weighted stock in healthcare is going to get going. So this is really exciting. I don't want anybody thinking, oh, it's just indices and treasuries. Oh, no, no. This is an ETF, which also maps to a very good stock option mover. You can absolutely day trade individual stocks with this as well, which I love. All right. So that's the example of XLV. All right. Let's talk about volume-based momentum timing as an edge. All right. Volume-based momentum timing. What does that mean? When the market hits the gas pedal, most traders are looking at price. We all see price. Price is about as level a playing field as we have. I don't want a level playing field. I want an edge. I want to feel as if I know something before everybody else does. And oftentimes that is going to be volume. All right. So volume-based momentum, that's the Trendalorian, gang. Okay, Rag, why'd you call it the Trendalorian? Who's seen the Mandalorian here? Love it. Love it. This is the way, right? That's what Trendalorian is telling us. Silly name, awesome signal, but not on its own, right? It's part of the overall pattern. Oftentimes, the last cue we're going to get, the market is going in that direction, is the Trendalorian. Think of the Trendalorian helping you in two ways. One, it'll be that point at which we hit the gas pedal and momentum gets moving early in the stage. It's also going to be a confirmation that we could continue to go a little bit longer, but we're going to continue to monitor that within the context of the trend, right? So we're always bouncing volume, trend, and price off one another for a complete look at the market, which I got to tell you, gang, most traders are only looking at price. And I can say this with so much confidence. If you're struggling right now, it's not because you don't know how to trade. You just don't have the full picture. It's not your fault. No one showed you, hey, are you looking at what time it is? Are you looking at the underlying market trend? Are you looking at volume confirming all that? And when you start to see that, now this is 4D. This isn't one dimension. This is 4-dimension, right? And that is why that Trendalorian is so powerful, because it will give you that kind of confirmation. In this case, this was another full point in ZB. This was another easy $1,000 per contract because we went the full point. We went to basically from the 121 to the 122 handle. And that happened really in less than an hour. So when I say we're being very nimble, I mean it, gang. 60 minutes, no more than that, about $1,000 per contract. And of course, please remember, if you're thinking, Rog, but I don't trade bonds. Hey, micros are coming, by the way. Micros are coming. The other thing you can do, of course, is play calls in TLT. And this is going to set up the exact same way, right? I see a Trendalorian. I have the pattern set up. I could either buy ZB and get long the futures contract, or I can buy calls in TLT. A lot of flexibility with this approach. All right, so let's talk about each indicator on the chart for a moment, right? I think we've covered a lot of examples, and hopefully this recurring process is starting to make sense. So let's stick with this chart here for a moment because we have everything here. So what is each indicator and what is it measuring? Let's do this here. All right, the process needs the trend, right? It doesn't have to be in this order. The process needs volume and really a volume trend. So with this, you get volume support, volume resistance, and the volume-based trend. Okay, that's what that V-score is giving you. So the multi-trend is giving you the market structure. The V-score is giving you that support, resistance, and trend. Trendalorian is telling you the acceleration, right? So that's what that key is right there. And then the grab candles that I use here, if I see blue, it's neutral. If I see green, it's bullish. If I see red, it's bearish. So when I start seeing red grab candles, and then I see a Trendalorian pointing downward, do you see how that's starting to work together? The more that you have that's visually easy to read and understand at a glance, the more confident you're going to be about the trade. If I'm trying to discern what all these secret squiggles tangled together are trying to tell me, and right now this might look kind of busy, but it's only because, I haven't shown you the individual patterns, right? But once you have that, and then you have the signals, things really start to pop. And there's a lot of arrows here. So in the beginning, You'll have the visual cues of the arrows, but eventually you won't even need them because you see the patterns. You say, you know what? Arrows are great, but I already see it. But these are great training wheels to start, quite frankly. They're really great ways to get your attention if you're looking at a lot as a day trader. So the day trading approach, which might seem very intimidating, imagine that you know what direction you're already going to be trading in and you're just waiting for the signals. And that's what I wanted very much to have this process do, just to be that easy. All right, moving on then to, this is natural gas. I don't know how many of you have considered trading natural gas before. I would highly recommend. There's natural gas full size, there's natural gas mini, and there's also the UNG ETF. All of these are quite liquid. This gives you the option of options in UNG, smaller contract, lower risk in terms of a smaller contract, meaning less dollars per tick, and then the full size NG. Right, so lots of choices here. I want everyone to realize every one of these presents lots of choices. By the way, if you like trading natural gas, that then maps to different natural gas stocks. And some of you might know about these, right? Natty Gas leads to Devon, Occidental, Marathon, a lot of very popular names. So let's talk about the setup again. All right, let's go through the process. Step one, what is the overall trend? The multi-trend automates this, right? That's the first part of the setup. There's 3 different things I'm looking for. And I'll usually start at the very bottom of the chart with the structure of the market. So write that down if you want. Okay, Rog, what's step number 1 of the process? What is the market structure? Answer that question first. Regardless of the kind of trading you're going to do, that needs to be the first question. That's going to give you directional bias. It's going to give you the path of least resistance. You're going to know if you want to be a bull or a bear, a buyer or a seller, right? Okay. The next process is volume indicating what it is I need to do next? All right, so let's go to the next part of the chart. We're going to move from the bottom to the top. The next part of the chart is, where is resistance? All right, let me show you where resistance is. Okay, we have some resistance up in this area. Here, here, here. Okay, what about support? Got some support in this area. And you'll notice the V-score automatically highlights those support and resistance extremes. You see that dashed white line? So step number 2, after you know what the market structure is, step number 2 is, what's the volume structure? Is there a trend in volume? Where is the support and resistance in volume? This is where the V-score kicks in. Okay, so now I know what market trend I have. Now I know where my support and resistance is in volume. All right, so then the last step is we get to the price chart. This is where we get a lot more granular. Do I have the Trendolorian helping me out? Do I have, and there's a number of very simple patterns. Notice the Trendolorian is 1 arrow that I'm looking at to jive with what's happening in the trends, the multi-trend, the V-score. We don't blindly follow arrows, gang. Everything's got to be in the right spot. That's what makes a setup, right? So if I know that, for example, we're at the top of the range and I was bearish and I've gone neutral and here comes a Trendolorian, what am I ignoring? I'm not going to buy at the top of the range in a bearish market. Easy to ignore, right? Remember, signals just know that a certain criteria is met. It's my job to go through the setup. Never follow signals and arrows blindly, gang, right? So we go through that process. There's your short. There's your short. Why? Resistance, bearish. Okay, well, let's see the other side. Market heads lower. Let's do it again. Let's start at the bottom. Do I want to still be a short seller? For the most part, I do. Yeah. This is really important, gang, because when you start using multiple tools, you look for where they're nullifying, invalidating each other. So on one hand, volume says, I think we're at the bottom. And trend says, yeah, but I think we're still moving lower. Who's right? We wait, right? This is where a lot of traders get into trouble. They have conflicting signals and they just kind of flip a coin and say, well, I'll just buy. And they realize, oh, I guess I should have shorted. We wait, right? Because the pattern says we need all 3 of these things to agree. All right, so we wait. This is where things start to look more interesting to the upside. neutral candles. Now remember, what's already happened? Volume said we're at the bottom, right? And some of you might say, Rog, that's a great little signal. It is, it is. We still want to complete the entire setup. All right, I want to wait for us to go neutral. Cool. And then I can look for patterns. Does it have to be trend orient? No. There are 3 patterns that I will look for. Trend orient is one of them. And I've got 2 other candlestick patterns that I look for. They don't need any more than 2 to 3 candles for each one to validate. And there's one other one that I'll look for, but it needs 4 candles and a little bit more number crunching. But it is something that is simple enough. So anywhere from a 2 to 4 candle pattern is all I need to do the last step of the process, which is price telling me it's okay. And remember I said that once we get in, a lot of times the trend orient is going to show up and say, yep, okay, you're already in. And now I see the markets are starting to accelerate. You see that? That's how this works. That's the process. And we just do that again and again and again. What is it? What's the structure of the market? Where's the volume support and resistance? Where is price confirming that all of these are aligned? And it's that alignment, gang, that we have to wait for. Because if you go back and look at your losses, what you're going to see time and time again is that you skipped one of these. You front ran your own process, or you didn't have all of these in alignment. Again, a setup isn't just an arrow that pops up and says buy. It's the arrow happening in the right underlying market trend with the volume behind it. That's that torque that gets us going. I hope that makes sense. All right, let's take a look at another example. So here we have AMD. So like I said, we can play futures options, micros. We can play the minis. We can play options on the futures. Did I say that already? We can play the ETF alternatives. Sometimes if I'm looking at crude oil, I can look at oil stocks. If I'm looking at natural gas futures, I can play the UNG ETF or natural gas stocks. So it opens the market up for us. That's what's exciting. This isn't about one magical market. This is about one magical setup that I can apply to nearly an infinite number of potential opportunities as long as they're liquid, right? We want that liquidity. So this is AMD, and I'm definitely going to talk about some of the questions. Yeah, PP, I saw you mentioned, how do you combine this with HPMR? It combines beautifully. I mean, I could write poetry dedicated to the power of V-score and HPMR together. So you might be wondering, Rag, are you not using HPMR? Oh, no. Absolutely am. We'll definitely cover more about that. So Kurt asks, when the V-score is what is the V-score showing when the line moves to the low side? Does it mean volume is low? No, it means we're at support. So think of it, Kurt, think of it less as a measurement of low volume or high volume or sort of traditional how many contracts are being traded. Think of it more as volume-based support and resistance, right? Think of it, I know it's a little different, but think of it as volume-based support and resistance and volume trends, because that's what it's able to do, right? So the extremes do help. Absolutely. The extremes do help, but then extremes on price are the same way, right? Extreme high could be resistance, extreme low could be support. And that's what we're looking for. Absolutely. Okay. So here's AMD. Here's AMD. And in this case, we can play options on AMD. You can also look at the SMH ETF. You can also look at the NASDAQ and things like that, right? So what we're doing here is looking at an individual stock, 5-minute time frame. And this is really, what I've been teaching you all, gang, is the quickest type of setup that I've developed in my 30 plus years. It's the most thorough at the same time because we're factoring in the trend, volume, and price, right? So what we can't see can hurt us. For example, a lot of traders will see this kind of move lower in a stock and think, well, clearly it must go lower, right? I mean, surely this thing is going to crush 67 and keep heading lower. Volume told you nearly 5 to 10 minutes earlier, not so fast. Let's think of the other side. Oh, we clearly must go higher, right? How many traders are momentum traders and will look at a candle like this and say, oh, we're going to bust up through 69 and a quarter and keep going higher? And then volume said about a candle before that, not so fast, right? So what we can't see can hurt us. And what is this that we're looking at? Size, gang. Size. Volume-based support and resistance. And again, I know that's a little unusual, but you've seen a number of examples here where that V-score is doing exactly its job, telling us that we're reaching resistance, telling us that we're reaching support. And then we put the other tools together, the trend and price, and there's your setup. Rinse and repeat. So here's AMD. It's a relatively inexpensive option. And again, really important. Support is going to jive with a buy signal from the Trendolorian. Resistance. Here's your resistance. So if I'm up in this area, then yeah, these Trendolorians make sense. Am I going to buy? No. So remember, we're not just blindly following arrows. A lot of people are looking for that approach. It doesn't exist, gang. But if you put each one of these and layer them up, your probabilities go way up, right? So here's AMD. This is a really nice, simple trade. And it was a couple different opportunities, but here, this is where everything came together. Really nice move to the downside, right? So there were buying opportunities. Thank you, right? Thank you. And then there were shorting opportunities right in here, right in here. And that is exactly the way we want to put this together. All right. Again and again and again. Underlying market trend, volume-based support and resistance, price. Okay. And right now it might seem wrong. I'm kind of seeing what you're seeing, but you know, what's the challenge here? Right? I mean, again, it's the quickest type of approach that I've developed where we're covering multiple dimensions of what moves the market, right? So if this is intriguing to you, and gang, this is working really well, not only on longer term, but it's working really well on intraday. And if we can focus on intraday until we get the clarity from the Federal Reserve that we need, until we know what the target rate probability is, and it's not getting any more in terms of to have to calibrate to higher and higher interest rates, that's where the uncertainty is, gang. We day trade. This particular trade was a $600 move for me to the downside. It did not cost a lot to put on. It was only a move from about 69 to 67.75. And by the way, for those, how many of you trade stocks? Actually trade the underlying stock. This works as well. Okay? This absolutely works as well. So keep that in mind. Okay, gang? All right, let's see here. What else do we have? But $600. And again, could you buy puts? Yes. Could you sell calls? A lot of folks have said, Rod, can I play XPX with this? I want to sell premium. Absolutely. Absolutely. We're going to look at the ES futures and look at the SPX as the opportunity, the same way I did with the SPY. So it's absolutely doable. So if this is starting to gel and make sense, this is why, gang, on Saturday, the 4th, we're going to have a class. You know that this is where the deck that I put together is going to use example after example after example. Here's the SPY. Let's start at the bottom. Neutral. Thank you, V-score. Thank you. Again and again and again, right? Start at the bottom, move higher. So it's November 5, right? Yeah, that's right. November 5. All right, let me show you the slide because I want to start showing you how you can see these setups. By the way, how much was this trade? If it was ES, this ES trade was actually a really nice trade, but I wanted to show you SPY. This could also have been SPX. And the question I get a lot of is, Rog, if I have a signal like this, can I sell calls on the SPX? I do have traders that do that, right? If I know that I've got a sell trigger, we have bullish momentum, can I sell calls in SPX and play those zero-dated options? Know a lot of people love to do that. Yes, that 100% works. So think about it this way. Sell SPX calls on the surge higher, great. And take advantage of the movement lower and the time decay, beautiful, right? Or get long SPY puts. Take advantage of the increase in the premium as those puts increase in value with prices falling. Or short the ES or MES, right? So many different things you can do. It's all coming from the same setup. Multi-trend, what's the trend? Volume, where's the support and resistance? Boom, and then price. Okay, so on the 4th, Now, I'm going to mention this here on the 4th, gang. We have our tech session. Really important, because one of the questions I always get is, Rog, how do I get my charts to look like yours? We're going to do that on Friday. All right. So that's coming right around the corner. On the 5th, we're going to spend 4 hours together, and I'm going to walk you through example after example and just hammer that one setup home. What's the setup? Everyone should know by now. Multi-trend, volume, and the price pattern. Again and again and again. And most of these are going to be accompanied by some kind of arrow. Not that you need them, but they're definitely there for that visual help. All right. Beginner breakout on the 7th. So we're going to be together on the 4th for tech, 5th for the class, and 7th for the beginner breakout session. So, all those great questions that happen after the 4-hour class, we'll be together that following, Monday for that, and then live trading. But let me go through what the packages are here, and you can find which package is going to suit where you are in your trading right now. All of these, I do want to mention, all of these come with time with me in my Sector Secrets Mastery. Okay, all of these. And by the way, and I got to scroll way back here. All right, but I think it's worth scrolling back. This is where the Sector Secrets Mastery is where these trades are happening. And I don't know how many of my Sector Secrets folks are in the room here today, but they will tell you we have been slaying it. We don't care what Powell says. We don't care what earnings are. We pick our opportunities in about a 1-hour window, and then we look for what other opportunities might be happening on the weekly or the daily. But there's no pressure to force a trade, because we've got about anywhere from 2 to 6 trades Monday through Friday in that hour window that we can take advantage of, and then wait for better setups longer term. We're not feeling forced to put on trades. So all of these come with time in the mastery with me. Of course, they all come with the tech session, the indicators. All of these packages have the indicators. Okay, gang? And then depending on whether you want to have 2 days or 4 days of live trading, you would go with the Pro or the Elite. All right, so let's get a little bit more detailed. One of the things that I want to remind everybody, and I really do believe this, right now there's so much pessimism in the market. I want to mention 2 things. One, can you have steady growth? Yeah. If it's not happening on a daily time frame, fine, we'll do it on a weekly or on a 5-minute, right? I'm not going to get pessimistic because there's too much opportunity out there. With all the negativity, we need a place, we need a process that's going to allow us to be opportunistic. Steady growth is possible. And I tell you that as someone who has never blown up an account, right? Why? Well, management is a thing, right? So is following a process and being disciplined. If you're new to trading, this is a perfect way to break those to never make those bad habits. And you've got this clean slate, right? Your learning curve is going to be a whole lot easier. And you're talking about one setup that's 3 dimensions. Gang, most traders don't even know there's other dimensions. They're looking at price and they're looking at price patterns. All right. You'll be getting all the tools you need, okay? And how to use each one of them. By the way, I know a lot of you here, and my sincere thanks, have already got the volume, the VWAP Max. We have renamed it, okay? And you don't have to rebuy it. In fact, many of you already know, if you go into the indicator section back at the Simply Trading website, we've already updated those tools for you. But you need the class for me to show you the setup and how I'm using it now. I have tweaked where I'm anchoring. I have tweaked the process. So you already have the tools. Thank you. And then I'm going to show you what I'm doing now. And I've been testing thoroughly for 10 months in terms of what to do with the V-score, where to anchor, and that process, that pattern that I'm sharing with you all. So if you already have the VWAP Max, check out this package. We put this together for you all. And yes, the VWAP Max is the volume max. And no, you don't have to get it again, but I definitely recommend coming into the class and learning all the upgraded tactics and processes that I've developed for that tool. All right. So again, now you get a better idea of what you're going to be getting in each package. The basic package, 4-hour class, November 5. That's just a couple of days away, gang. You get the VWAP, the V profile, V score, volume labels, and Trendolorian. Oh yeah, I've only shown you really 3 of 5 and actually 6 very cool automated tools that are going to help you make decisions in your trading. That was just the 3 main ones. So imagine once you start understanding a little bit more about volume profile, support and resistance, how to anchor the volume weighted average price, you're just going to see all this so much better. So multi-trend, this is a game changer, gang. Remember, that was step 1 of the process. And again, the biggest question that I get is, Rog, how do I get my charts to look like yours? That is what this session should be called. And the Lorna bot, which a lot of you know Lorna bot, she knows my indicators and my processes inside out, and she's going to get you set up so that when you get to Saturday in the class and then Monday with me for our breakout session and into live trading, your charts look like what you need them to look like. Okay, really important. That's all going to come with the basic package and 30 days with me. I don't know how Trish made this happen, but she did. 30 days with me in the basic package. All right, pro package. This is where we start to add the live trading. I cannot guarantee that we're going to be able to make back your investment in this class, but that is always the goal. And the way that we've been day trading lately, it should not be a problem, but that's always the goal. So the pro package is everything in the basic package, including live trading. So again, you get all 5 of the tools. I think we've thrown in the Darvis in there too, the Darvis 2.0. So some automated support and resistance. I did talk about that a bit. So you're going to have all the tools you need, all of them, for this setup. Those of you that are wondering, Rog, what about grab candles? Of course, we're going to continue to use those. What about Darvis 3.0? Amazingly helpful. Bring that with you. I never abandon my old tools. I'm never going to say, well, this is replacing that. Never. We just take a great engine block. We continue to make it better and faster and more dependable and reliable. We add torque, you name it. That's what we're looking to do. So if you've got HPMRs, bring it. You don't need it for the setup, but it's only going to add more information dimension to the overall approach. All right. So pro package again, multi-trend indicator. And now we go into 2 days of live trading. We're going to split it up, right? I don't want anybody just getting day trading, and I don't want folks thinking it's just daily and weekly. We're going to do all of it. 1 day with me day trading, and then 1 day with me longer term daily and weekly. So if you're thinking, Rog, how do I do things with my portfolio with this? I know that you rebuilt your portfolio in 09 with the V-score. What if crazy things happen this year? Can I do that now? I'm going to show you how to do it. What about daily time frames? Rog, are there opportunities for swing trades? I'm going to show you how to do that. So we're going to have a session for intraday, and we're going to have a session for the longer term so we can put everything together. That's a big part of the pro package. Instant alerts, well, you know how we roll. We're going to let you know what we're doing when we're doing it. All right. And that'll pop up on your phone. That'll pop up in the rooms. All right. So again, tech session. This is Friday, gang. This is coming right up. So if you're thinking, yeah, Rog, I want to set this up. Remember, Lorna Bot's going to be with you. And on Friday, we're going to do that tech session. Really excited for that. Okay. And then the beginner breakout session. The cool thing, we've never done this, but a lot of folks will say, Rog, I took the 4-hour class and I still have some questions and there's still some things that I'm not sure about. We're going to get together for another 90 minutes so we can make sure we fill in the gaps with the indicators and the strategies. And this is excellent preparation for the 30 days that you're going to be with me in the Sector Secrets Mastery and for the live trading that's coming up. And we've never done this before, where we follow up the class with another sort of mini class / Q&A. This 90 minutes is going to be, I think, what a lot of you wish you had with other classes, which is I finished up, but I still have questions. We're going to have that session for you on Monday. All right. So really important that we get the ball rolling so we're ready for live trading. So I think the rest of the year is going to be pretty darn exciting. Okay. So long-term portfolio management session. With the pro package, we get this long-term portfolio management session. This is a dedicated 2-hour session. Rog, you showed me that you're an XLP. That's a pretty nice trade right now. We're also in a number of other longer-term weekly timeframes. I think one of the recent Charts and Coffee sessions, somebody asked me, is it time to buy Amazon? This was, I think, end of last week. And I said, please don't. The V-score hasn't bottomed out yet. Go take a look at what Amazon has done. Somebody asked me, is it time to buy Microsoft yet? No, because the V score has not bottomed out. And that pattern that I've shown you, it's not aligned yet, right? So folks are thinking, well, Amazon can't go any lower. The heck it can't. V score had not bottomed out, and we don't have the setup. Does it work on a weekly the same way? I'm going to show you how to do that in that 2-hour session. And of course, 30 days with me in the Sector Secrets Mastery. So you can continue to take all of this. All right. This is where, for those of you that are looking for the absolute most thorough way to get into this, and this package is actually really ridiculous. I'm going to show you why. It's the Elite package, the 90-day immersion. So yeah, what does that mean? Strategy class, all the indicators, the tech session with Lorna Bot, all 4 of the live trading sessions with me, right? 2-day trading sessions, 2 longer-term trading sessions, all the alerts, and then that beginner breakout session. So this is sort of the Q&A class after the class, right? So we have the 4-hour immersive environment, and I'm going to see you just a day later on Monday, and we're going to keep the conversation going so we can fill in the gaps. And then on Monday, we're going to start on December 5, that long-term portfolio. This is going to be important, gang, because now you're looking at the market in a way that's going to allow you to understand if and when the you-know-what hits the fan and we melt down. How do I understand where the market could go? How do I make sure I don't buy too soon and get run over by a sell-off? That's the V-score, and that setup, that bottom-to-top approach works on the weekly as well, and I'll be showing you that. This is where it gets ridiculous, gang. 90 days, a full quarter with me in the mastery. Okay, so that means alerts from the mastery, day trading with me for 3 months, as well as whatever swing trades. And this is just a little bit of what some of our members have to say. It's a needle mover, gang, because what you're going to do, you don't just get me and Lorna Bot, but you get a group of hundreds of traders that are trading in a similar fashion, scanning the markets together. It's a great environment, gang. I cannot emphasize enough. This is the bulk of my trades. This is the bulk of where I do most of what I intraday, daily time frame, and weekly, and that they all get alerts. But when I'm not on the mic, you're with a group of traders that are helping you out, scanning the markets together. It's an amazing environment. You really have to check it out. All right, Basic, Pro, and Elite. Again, all of them include time with me. The Elite is ridiculously awesome because that's an entire quarter with me, as well as the long term, as well as the tech, as long as with the breakout, the indicators and everything. All right. So of course, interest-free payments with PayPal credit. And these are the packages. I will see you on Saturday, but let's answer some questions. All right. Simplertrading.com volume. All right. So let me grab the chat window and put it here in front of me. I got 9 screens in front of me. So gang, when I look like my head's on a swivel, yeah, I got a lot of stuff going on, but thank you so much. Philip says you and SSM are awesome. Philip, it's the members that do it. And I do appreciate that. That is awesome that some of you are here today. All right. So let's grab the, you watched the first webinar, Brent. I am feeling 100% better. And it's really, I'll tell you what, I'm not feeling 100% better. I'm feeling 85% better. But I know that what we're talking about right now is a needle mover. It really is. It's already turning into one of my favorite classes already. And we haven't even taught it yet. Love the matching shirt color with the main screen. Mark, I think I have 4 of these. Thank you. Always happy to join you. Dale, always happy to have you. All right. Let me see what questions we have here. And I definitely want to take some questions here, gang. Ultimately, where's our, so I have our, let's see here. Where's the questions that everyone's given me? And I thought I had it up in front of me. There it is. Okay. So I covered 2 of them, Philip and Kurt. So let's grab some of these questions. There's a question here about other indicators. David, I appreciate the question. I don't use any of those things. So I would not want to say that, make any commentary because I don't use any of those. What I can tell you is this. This indicator, the V-score, is really as simple as reading a line chart. So maybe if you want to do some comparative things, it's as simple as reading a line chart, right? It's just that simple. There's an upper end and a lower end. It's just that simple. And this is the indicator that, again, in 08, when I thought, oh gosh, are we just going to keep melting down Is this the end of the markets? Is this the end? This is the one that said, nope, look at that. Low, low, low. We haven't seen it since. By the way, when people ask me, Rog, are we anywhere near these levels? Right now, not even close. So I don't know about those other indicators, but I can tell you how easy this is to read, okay? All right. So the next one is, what is the account size? So David, in that account, I had, so the account that I made, so you're asking about this one? No, great question. In this particular account, I started with, believe this account had 120,000 in it, $120,000. But remember, everything is scalable. Remember, I showed you the example of I accidentally bought 60 Dow instead of 6. We have traders in the room that trade 2 micros. We have traders in the room that are trading a handful of options. We have traders in the room that are trading a couple of minis, and we have some traders that are moving dozens of SPY calls, that are writing premium on the SPX, and then that are trading micros and minis as well. So everything's scalable, okay? But I believe that was about 120 or 125,000 balance in that one. So I think my ending balance right now is about 330 after the 180. Okay, I hope that helps, David. All right, next up, how has volume played out today's news? Praveen, I was actually day trading with the group in the options room and in my mastery between 2 and 3 o'clock today. And it was, we did not enter before Powell's press conference. I warned everybody, let's not do that. And then after the press conference began, volume actually did pretty admirably. Yeah, it actually did quite admirably. I believe we had 2 or 3 setups in that window. We had to get in and get out pretty quick, but volume held up pretty darn well. We had a lot of volume to deal with, but remember, anytime you're trading in that environment, I would normally tell folks not to do it. The trades that I was showing you, those were all done in my favorite window of the morning, which was, I believe the majority of them are done between 9:30 and 10:35. Okay, so just an hour. I don't want folks day trading all day here, gang. That is not the point at all. More hours day trading is not better. The best hours that you maximize and control risk, that's what we're looking to do. All right, how do I decide if there will be support for choosing an anchor? So Tom, there's a number of things we'll do. We can look at events. We can look at the amount of volume that occurred that day. We can look at even time. There's a pattern that I'll look at as well. So there's a number of things we can do to sort of mechanize that process. Yes. And that's what the class is really going to walk you through. All right. Let's see. So the trend DeLorean arrows appear both at the candles and on the V-score signals indicator. No, Sam, the V-score has its own arrows, and the trend DeLorean has the arrows on the price chart. So they're actually arrows for two different things. The V-score arrows are your range extremes, your overbought and oversold, if you will. And the trend DeLorean is going to be on the price chart, and that's when we see the momentum hitting the gas pedal, so to speak. That's when that acceleration based on volume is occurring. And very often, you're going to see the V-score precede the trend DeLorean. You're going to see the V-score precede the correct trend environment. You're going to see the V-score precede even the patterns. And that's the way the setup works, right? That's definitely part of what needs to align to make that setup high probability. All right. Next up is, do I track my average drawdown? I track whatever the software is that I use. So Zane, I use 2 softwares right now, TradesViz, actually 3. I use TradesViz, TraderSync, and Wingman Tracker. And yeah, they do measure those and a lot more. They'll talk about risk reward, average loss, average win. Yeah, there's a lot it does break down. Absolutely. Do any of your specialized indicators have the ability to alert us if we aren't in front of the screen? So Jessica, if you're looking at daily timeframes and weekly timeframes, yes, we use alerts. You can just simply use the alert built into the indicator, which Lorna Bot has created. You can also place price-based alerts, which is what I teach traders to do. So if you're out and about, I can't tell you how many times I've been out to lunch with my husband and my phone buzzes and my price level's been hit that I want to go buy an option or buy some shares at. So that's another way to do it. I will say for the day trading, I would not recommend it, but I think a lot of you probably already know that, right? But yes, you can place price-based alerts, and the indicators themselves do have different alerts that you can activate if you want that audio and visual notification, okay? Well, I explained my indicators. V-score, I think we went through a little bit of this. John, I think Trish nudged me and said, hey, break down the indicators a bit. So again, V-score is volume-based support and resistance in trend. The multi-trend is the structure of the market: bullish, bearish, neutral. And let's see. Yeah, what are they? Yeah, I hope we kind of cover that a little bit, John. So again, V-score is volume-based support, resistance, and trend. And the multi-trend is what's the structure of the market. All right. Let's see. There's a big one here to unpack from Greg. Is it when possible use no stops? Greg, I'm not sure what the question is there. On that one, I'll kind of check back. If you could just give me the question, I'm not really sure what the question is there. On slide 21, the V-score signal had a red arrow pointing down, but the trendo pointed up. What gives? Sam, if you notice, one of the things I mentioned is sometimes there's conflicting signals. So let me go back there. You said slide 21. Okay. So this was the ZB. Sure. Let's do some drawing here. All right. So here we have top of the range, right? But also notice we're at the bottom of the range here. So this is fine. Right? This is happening shortly after we bottomed out with volume. So that's fine. Once we get up to this area, you got to start scaling out. And now we're at resistance, right? Now we're at resistance, right? So they're not necessarily in conflict on this one, but this is a short sell then that's setting up. And then the trend DeLorean comes along a little bit later, says we're going to accelerate. And actually, we did accelerate to the downside a bit. So I hope that answers the question a little bit. If ever indicators conflict, and we'll talk a lot about this during the class, if the indicators conflict, there's no setup. That's the alignment. This is where a lot of traders will say, well, one of my indicators is giving me a signal, and then they wonder why their results are 50-50 at best. Yeah, we need total alignment, okay? We need total alignment on that one. All right, next up, what's the difference between Darvis signals and trend DeLorean? One is price-based, PPP. Darvis is price-based, exclusively price-based. Trend DeLorean is mostly using volume. Okay, so that's the difference. A price-based tool, which is amazing, and a volume-based tool. So we're having a multi-dimensional look at the market. Will I be sharing the 2 and 4? Oh, of course, Warren, I'll be talking about that in the class. So we start with the bottom of the chart. What's the structure of the market? We go to where the support and resistance is in terms of the volume. What's the trend of the volume? Where's the support and resistance? And then once we get to the price, one price pattern is the trend DeLorean. And then we have a couple others that we'll look at, and I'll show you. And again, they're no more than 2 to 4 candle patterns. And when they appear in the right alignment, that is a go. All right. So next up is what would my entry zone on natural gas be to go long? Let's see here. To go long. All right. So this one is an interesting one. We talk about alignment. Is a buy aligned here? No. Right. So now I'm waiting for the transition to an allowable trend. Right. So that's happening right in here. And then I'll wait for a price pattern. So this is where sometimes volume will precede the setup long before the trend and price says it's okay to go. But you know what's interesting? Look how long we remained in the zone before it went higher. And this is why you need the complete pattern. You need the volume, the multi-trend, and the price pattern. That's the whole thing. If you get that alignment, the probability goes way up. That's the setup, right? All 3 of those dimensions. And then imagine for those of you that are saying, Rog, I have HPMRs. If my HPMR is lining up with all of that, let's say you have an HPMR in here, is that something I can just add to this approach? 1000% yes. Okay. As far as where was I setting the stop? John, on that one, the stop was going to be, but what was the stop on that one? I'm trying to remember. If I would have gotten stopped out and I had no intention of going with 60 contracts, but I think the bot told me what was a risk. I think it was 45,000. Again, I did not know, but I think it was a great example of being scalable. Yeah. How does a V-score differ from the RSI? RSI does not use volume, Stephen. If you think about what a relative strength index does, it's a completely different calculation. V-score looks at volume, and it specifically looks at the volume weighted average price. It looks at the VWAP, and it's able to use the VWAP and standard deviations of it for support and resistance. All right, for the AMD chart, can I explain the down arrow at 10:30? Okay, up there, yes. It's blue. How to stay in that trade when it's going up? So remember alignment, right? Do we just trade the arrow? No. Once you understand the entire setup, this is not the only step, is it? This is the last step, isn't it? That's step number 3 when you think about it. Yes. So 1, 2, last. Step number 3. So I want to ask myself, first of all, is volume helping me out? Not too bad. Not too bad. I mean, yeah, you could say that was a decent little trade if you wanted to say take that. But when is the alignment there? I'm going to wait for, right, a peak in volume. Is that alone a trade for me? Not necessarily, right? A peak in volume, although that is something that's powerful, right? There's a pattern in here as well. There is a price-based pattern in there as well. I would not be looking to get short, by the way. For those of you wondering, Rob, when would you get short? I got short as we broke down through 68.75. I believe I shorted around 72, 68.72. All right. So that's where I confirmed neutral environment. I had an overbought market via the V-score, and then I'm waiting for a price pattern. All right. And again, the idea that we're going to continue to go up in a significant way, gang, this is the wick right here. Look at that resistance. We topped out right there. There's your top right in here. We really didn't go that much higher. We kind of chopped around a bit, but we really didn't go that much higher. V-score said this is where the top is. We tested it one more time, right? That's what we're looking at. Yeah. Okay. Is this an updated V-score? Yes, gang, if you have the V-score already, if you purchased it or it came with a class before, we update the indicators for everyone. Okay, so if you go back into the indicator section, you'll see you have the updated version of these tools, and the VWAP now includes the Trendolorian. Now, you've got the indicators. What are you going to do with them, right? The whole plan now is learn to set up. Come join me in the class. You don't have to buy the indicators again. Come join me on Saturday. Get the beginners, get the tech session, and you get 2 days of live trading with me. Come see what I'm doing with it now. Absolutely. Take the refreshed indicators and come take the refreshed tactics that are working in 2022, right? That first package was released in 2018. We had a very different market back then, right? So what we want to remember is you've got powerful tools that can handle anything. And now we're going to put a really systematic 1, 2, 3 setup approach to the tools you have. It's really the simplest thing I've ever done, quite frankly. All right. As volume moves up and down, how do I determine which volume level takes precedence? Dane, there's a lot of things I'll look at. It's not a matter of volume moving up or down, but what's the threshold? What's the measuring stick? Is it an event? Is it time? How much higher than average are we? So there's a lot of things we can look at in terms of the reason for the anchor. Okay, there's a lot of things we can look at for the reason for the anchor. All right, so Lorna Bot says here, the question was if we can use V-score and Trendolorian for stops. Um, I don't I haven't used them for stops because typically they're going to be targets, but remember, they're just support and resistance. So if you're looking for where there's support and resistance, and that's going to be part of the process for some sort of risk control, I won't say no, but I don't really have to do that. No. Okay. All right. So thanks, bot, for the help there. Let's see here. It seems that I would go short while the multi-trend is still bullish. No, Amy, I won't. We'll wait. We'll wait. Now, again, the lower row of the multi-trend is what we look at for the trend. I don't mind if momentum is still bullish. I don't mind if momentum is bearish or neutral, but I won't fight the trend. Very rarely will I do that. Very rarely will I fight the trend. That's one of our hard and fast rules that we have. All right. Since there's no volume in SPX, do I use the ES as a proxy? Stephen, absolutely. You got it. You nailed it. That's exactly what we do. It's exactly what we do if we're going to trade SPY, SPX, micros, options on the S&P. You got it. I'm mainly interested in options trading. Hey there, Christine, on the indices, sector ETFs, and stocks. Well, then you're going to love the Sector Secrets Mastery. I can tell you that hands down. During my Saturday class, will I go through examples to teach us that? Absolutely. Christine, here's what's really cool. A really good process, a really good trading process. It shouldn't even matter what's in the upper corner here. It really doesn't, because the process doesn't care that this is AMD, Apple, or the Australian dollar, right? It just knows what the structure is, what's the volume telling us, and where are the price-based patterns that'll get us in. So the cool thing is this works on everything, and it works exceedingly well because we're measuring human behavior. That's why it works. You say, Rob, why does it work on everything? As long as there's liquidity, we're looking at basically human psychology. We're basically mapping out the mood of the market. That's the trend, the size, where are people digging their heels in, and then finally the price action. Where is that catalyst for more movement? So absolutely, yes. Christine, absolutely. So don't get hung up on the symbols as much as remember that it is robust across multiple symbols, across all markets that have volume and good volume, liquid markets. All right, the indicator at the bottom that has different colors stacked on top of the other. Which color do I use? So the top row, Vincent, is the momentum. The bottom row is the trend, and it's the trend that I'm most interested in. Okay. All right. Next up, what is the charting software? Erica, great question. The charting software that I'm using is one of two. You can choose whichever you'd like. Thinkorswim and TradingView. Thinkorswim and TradingView. So we have the package with those two. So if you're not on the Thinkorswim platform and you want something more broker agnostic, TradingView is fantastic. What is the Sector Secrets Mastery? That is the room, Kamal, where I trade with traders 5 days a week. We do. You know what? Let me show you here real quick what that schedule looks like. Can y'all see that? This is this current schedule, the Sector Secrets Live. It's a trading room where I am the trader who walks you through day trading. Lorna Bot has a tech session. We have a portfolio building session. This is every week. This is every week. So for those of you that are signing up for Basic, Pro, and Elite, this is what you're getting. And you can come in when it's convenient. So if you say, Rog, yeah, I can day trade with you for about an hour in the morning. Cool, right? Rog, yeah, I'd like to see what you're swing trading and watch list building once a week for an hour. There you go, right? Portfolio building. Yeah, I'd really like to know what's going on with that weekly time frame. Are we going to have opportunities to build for a longer term time horizon? We have that once a week. And then on Friday, to wrap everything up, we're very big on Q&A. We're very big on, okay, Rog, I'm kind of confused. Here's a trade breakdown. Can you help me? And that's every Friday. This is our Sector Secrets Mastery schedule. And that's what that is, Kamal. I hope that helps. All right. As far as the day trading playbook class, so Victoria, what's the difference? It's using the updated volume tools and this particular setup. What's the underlying multi-trend? What's the volume? And then also, what is the, and let's see. Yeah, what's the, hang on here. Got a lot of slides in this deck. All right. Yeah, for those of you wondering about the Sector Secrets Mastery, yeah, hang on. Let me see if so yeah, what's the difference? Every class we have, and that's a good question, Victoria. Every class we have has a different focus. I don't teach the same class again and again and again because, frankly, the markets are different. I find things that work better, right? And then I also find ways to make it hopefully easier and automate things. And that's always the progression of my classes. So, are you going to find some things that are similar? I hope so. I hope that the main philosophy of what I'm doing is rooted in something familiar when you go from one class to the next. But when you take this class, you're going to see it's just adding another layer of what you might have learned from the day trading playbook class now to your weekly time frame, your daily time frame, and your 5 minute. So the biggest difference, Victoria, is it's not just about day trading, but it's about the weekly, the daily, and the 5. That's probably the biggest difference, that we're covering all the different time frames. And by the way, I cover all the different time frames in the Sector Secrets Mastery as well. All right, what if we have the HPMR? Does this work with the indicator in the chart? Samuel, absolutely. I could say a kind of abso-beeping-lutely. I cannot say that more vehemently. I love the HPMR. I think it is a magical indicator. There are days I pinch myself. I can't believe I created it. Does it work? Imagine, Samuel, now you have volume and volatility. You've got X-ray vision at this point. You're seeing through walls. Yeah, Superman's got nothing on you with that combination. Yeah, absolutely works. How do I set up the VWAPs? So Rex, what we do is we anchor them. I don't use a rolling VWAP. We anchor the VWAPs. It's really important to be able to anchor the VWAP. Is the trend DeLorean part of the V-score? It is now. Amy, once you update, you'll see if you already have the old one and you go back and refresh that package, it's built into the VWAP. Yes. Hang on, guys. You got great questions here. I'm trying to make sure I can cover all of them and not keep you all too late. And I appreciate everyone's time. Some of the tech questions, gang, Lorna Bot will tackle on Friday. And then if you have tech questions, feel free to reach out to the office. They can help you with that. All right, let me make sure. Are there any books that helped you with volume, price, trend, strategy creation? B, I wish there was a book. Not even the 3 that I wrote. I would say this is from, I could tell anybody to go read a trading book, or I could say, put a small amount of money in an account and trade a share, a contract, a micro. You're going to learn more from 10 or 20 trades that you place in the market than any book, because eventually you're going to take that book information and put it in the market. I've already done that stuff for you, but I wish there were. There isn't, my friend. Nothing, because most of the indicators that you're seeing here, V-score, the questions about HPMR, these are things I created. There's no book covering that because these are tools that I created. Yeah. All right. Let's see. Questions. So the V-score does not have the trend DeLorean, gang. The VWAP has the trend DeLorean. And again, we'll talk more about that in the text session. Do hourly price movement ranges work for daily charts? No, my friend, they do not. By the way, let me just mention this. If you've signed up for any one of the packages, Basic, Pro, and Elite, and you're seeing all these folks talk about HPMRs, and I'm waxing poetic about how well they work together, when you're with me in the room, we do offer a total of 8 symbols for HPMRs with the mastery. So when you're with me in the mastery and you want to see what the HPMRs do with the V-score, S&P, NASDAQ, Dow, Russell, we put those in the mastery. So when you get in the room with me, you get 30 days with me at Basic and Pro, you get an entire quarter with me at Elite, you will get also access to the HPMRs, and you can have the mind-blowing experience of being able to add HPMRs to this absolutely phenomenal setup that I'm going to teach you on Saturday. And it'll blow your mind. It absolutely will. All right, gang. So no, intraday only on those HPMRs. All right, gang. And then if you already have the and all of it's at simplertrading.com/volume, gang. You'll see that link at the bottom of each one of these slides. But if you already have and you're saying, Rog, I've got the indicator. I see the updates. I really want to know what that setup is. This is the package for you. All right. If you already have the Volume Max Toolkit, there it is. You get live trading with me. So you get one live trading for intraday. You get one live trading for the end of day longer term. Okay. And that way you can get caught up on everything that I'm doing that's been refreshed in the almost 4 years, 3 years that we first introduced these tools, right? Even I have evolved the use of these tools from when I first created it back in 2008. So you're getting the freshest setups with these tools that I'm using right now. Now, for those of you wondering, what's the difference between the live trading days and the mastery? Again, they're two different things. Live trading days will not be broadcast into the mastery. So if you're wondering, well, Rog, I'm part of the mastery, I'll get the live trading. Sorry, friends. No, they're completely different sessions. These sessions that we are doing for the class are class only. So if you want to attend these and be in the mastery, awesome, right? Awesome. But no, these are separate from the mastery. These are completely separate. So the class, the live trading, the breakout sessions, these are all separate from the mastery. Okay. Thank you for the question there. All right. So I hope you all are going to start thinking about sort of a bottom to top approach in your trading. Start thinking about underlying trend. Where is the volume-based support and resistance? And then lastly, where is that much more granular level of analysis to get you in at the price level? Remember, what is that going to do for your trading? Most traders, the reason they're struggling in 2022, and they're going to probably struggle throughout their careers, is they're one-dimensional traders. Not their fault, right? Not their fault, like it wasn't when I was. No one taught me the other three factors. No one taught me, Rog, you got to know price-based volume. You've got to know what's happening from a time perspective, and you've got to know what's happening from a volatility perspective. So I went about figuring out a process to be able to measure those and plot that on a chart, right? So most traders struggle because they're price-based only. They have no idea what the underlying market trend is, right? And then also, they definitely don't know what the support-based volume levels are, all right? So when you put all that together, again, all four dimensions, you're going to see the market in a really different way. And the process that I've created was as much for me as it is for you all, because I got complacent. I started to neglect volume because 2021 and 2020 were easy pickings. You really didn't need to be as discerning as you have to be now. So I created a process even for myself, so I never make the mistake of neglecting volume in any way, from support, resistance, trend, and momentum ever again. And so this is going to be my staple, my setup going forward. This is my new hot rodded engine block that we can add all sorts of things to. If you have HPMRs, bring it. If you have the squeeze, bring it. If you have ready, aim, fire, bring it. These are all great tools that volume is only going to make even greater. Okay, so this will work with whatever you have and love right now. Thank you, everyone, for being here. Thank you so much for wanting to be better traders. Thank you so much for your time with me and trusting me to, hopefully take you to where you can be as a trader. You know what we've been doing in terms of intraday, and now you add that to the conversation for weekly and daily, and you've got a full approach. And I cannot wait to see you all on Saturday, because we're really going to move the needle. I know this because it's been working for me so well this year and throughout my career. And I'll tell you what, this is probably one of the simplest, most straightforward courses. I'm even looking at the slide saying, is it that easy? Because we're using the right process, it is. And because we've automated it, it is. So thank you so much. simplertrading.com/volume. Really looking forward to seeing you Saturday. And then remember, we've got that session on Monday as well. So check it out. See what's going to work best for you. And I will see you on Saturday. All right, gang. Be good to each other.